Okay, Assalamualaikum and good morning or good evening to some people from the other side of the world. I'm not gonna beat around the bush. Let's just crack on with the webinar because it's already been delayed by so near an hour now. Okay, so before we start the webinar, I think it's best that I show you guys how to set up the what do you call this, the soft FX simulator. Okay, so let me just hang on. Let me just share. Okay, so first things first. I'm just gonna show you guys how to install the Forex simulator. Obviously, the one that I shared is the demo version, so you can only enter as I think about 4 lots maximum, and that's it. And then there's a time limit to that. Okay, so first things first, when you open the data folder and then MQL4. Once you open MQL4, you go to experts and you just install the simulator over here. And after that, you just refresh this expert advisor, and that will make things work for you. So okay, so let's say you want to do a back test and you wanted to do it on multi-time frame analysis. So what you do here is you use the MetaTrader and then you pick whatever pair you want to do. Let's say, for example, USD CAD. Okay, so this is your starting balance. For example, how much you want to start with. Let's say let's go for $100 over there because the minimum is $100. And the minimum time frame that I want to look into is about M15, okay, or M5, totally up to you. Pip size, totally up to you. Leverage, you can change up to 500, whichever you want to use. And I usually like to use 30 days back for the initial history on the charts. Okay, so spread, depending on your particular what do you call this, broker. So you start the simulator and then you generate it. Once that's done, you start the simulator. Okay, now the simulator has started. What you want to do is you go to charts, and obviously you start with M15. You add that one over there. You open up M30, H1, H4. Okay, so let's say you're a scalper like me and you just want to go up to that level, or maybe daily. Okay, so once you've done that, you open it one by one. Bit lag here. So it adds over there, and then you open M30, H1, H4, and daily. Once you're done with that, then you go to each time frame over here, and then you just load whatever setup you have. Okay. All right. So basically, the daily bit is not yet finished, so you just have to let it run for a while. But H4 has already started. You have M30 over here, sorry, H1, and then M30, and then you have M15. So for example, you have, let's just, this is just an example, okay? So if you want to sell, for example, you have M15 here, and you want to play it. So usually you can adjust the speed in accordance to whatever it is. Okay, so if I know it's going up, so I'm just gonna buy and let it run for a while, or you can speed up the process. Next bar, So something like that. So, and then you can see over here at the bottom, this is your floating profit and loss, and that's your equity. You can also set pending buy stop sell stop. But basically, you can only, for the demo version, you can only use as much. I think about 4 maximum. So I think that's about it. If you want to close a position, you can close all or close last. You can see your trades over here on this tab. So if you want to close this position, you just go to close, and then that's it. It's added to your profit and loss. And obviously, if you want to do multi-time frame analysis, then you can switch through, because the market is moving in accordance to on all the same time frame. So if you want to speed up the process, you can do that. So obviously, it's speeding up like this. So you can do that, and then you can pause and you can check the multi-time frames that you want to do. So obviously, if it breaks H4, then obviously you know that it might be a possible re-entry on a daily, something like that. So I think that's about that with simulator. So let me just close that. Okay. Right. So if you have any question throughout the webinar, just post it on the message box, on the chat box. I'll see if I can answer that. Okay, so first things first. Obviously, during the webinars, what I always do is I start with candlestick formation, candle break and reject. So these are the basic stuff that we really need to understand fully before we do our daily trading. Okay, let me just open again the. Okay, so I'm just gonna go straight to the webinar. If you lose visual or audio at any point, just put it on the chat box so I can take notice of that. Okay, so now I add in here some stuff for basically for the candlestick formation. I put on 4 moving averages here, Mahi 5, which is moving average high 5, Mahi 10, which is moving average high 10, and obviously the low indicators at the bottom. Mahi 5 and 10 are sell indicators, and Malo 5 and 10 are buy indicators. Let's say, for example, this is an H1 time frame, and the time now is at 8 p.m. and there's a new candle that opens at this particular price. You have to understand that the market, the chart has what you call an X and Y axis. So basically, here at the bottom you have time. Sorry, that's the best handwriting I can do with this one. And over here on this side is you have the price. Okay. So basically, as time passes by, the price moves along in accordance to the time. So that's what you have for the what do you call for the forex charts. Okay, so you have the buy indicators at the bottom, you have the sell indicators at the top, and at 8 p.m. on an H1 time frame, you have the candle open at this particular price. Let's say, for example, at the $1 price. Okay, so let's say in 15 minutes time at 8:15 the price moves downwards. So let's say, for example, the price went down to about 80 cents. Another 15 minutes passed by, the price rose up to $1.20. Okay, and what it does that the initial sell candle, it looks like a sell candle, becomes a buy candle. So what happens is this candle open will never change, will never move. Even how much the movement of the candle does, where the candle opens, it will never move. So as soon as the candle travels down here and went back up, it will leave a trace, like a footprint, that tells you that this candle has traveled down to that lowest price mark. Okay, so this is what we call a candle shadow or candle wick. Okay, moving on. Another 15 minutes pass by. The price continued to rise up to maybe $2 plus, and goes through my 5 and 10, and then another 15 minutes goes by. Obviously it went back down to this particular price level. So at 9 p.m. this candle closes here, and obviously it's exactly the same as what happened down here. When the price rose up and it goes back down, it left a footprint, a shadow, or a wick. Okay, so this is what we call a candle reject, because the candle couldn't manage to break through these moving averages. So it works with moving averages, and it also works for Bollinger Band, as we will see later on. Okay, so the lowest price is at this point of at this end of the candle wick, and also the high price is at the highest point. And obviously what is left of the candle is the candle body. This is very important because we need to know that we need to understand that candle break requires the body for it to break, and also for rejection you need the candle wick. We don't really need to know much about the range. So after an hour, at 9 p.m. a new candle opens exactly a beam the candle close of this candle. So basically a candle that opens at the bottom and closes at the top, this is a buy candle. Okay, so the buy candle closes at 9 p.m. and obviously 9 p.m. another candle opens as exactly as where the price has closed before. So it kind of closed here, candle open. Okay, but sometimes how come there are other candles that opens on a different level? So the only rational reasoning for that is during the process of candle close and the opening of a new candle, the price rose or goes down in a split second, that the new registered price on the open of the new candle is much lower or much higher than the previous one. So I mean that's how I interpret it. Excuse me. Okay, so at 9 p.m. a new candle opens. So 50 minutes pass by, it rolls up, crossing my 5 and my 10. And then another 30 minutes pass by, it falls, price falls down, and left a shadow on my 5 and 10, which is a rejection. Okay? And obviously it went down to this lowest price over here. And then another 15 minutes come by, it closes at this particular area. So what we can see here is there are two points here that indicates that this is a rejection and this is a candle break, because this candle body breaks the moving average low. If the candle breaks the moving average low, which are buy indicators, then obviously this is a candlestick direction. It tells you that the price is gonna keep going down. Okay, so I just noticed that there's discrepancy here. It's my mistake that the pink color one is smaller 5 and the white color one is smaller 10. Forgive me for that. Okay, so basically this is a rejection, and when the price rejects a sell indicator, this means that this is a sell entry or a re-entry. And when the price breaks the buy indicator, then this is a candlestick direction. It tells you that it's gonna continue to sell. So I think that's about it with candlestick formation. Is there any question if anybody do not understand that part? Is everyone okay with that bit? Okay, so moving on. Now let's talk about BBMA basics, okay? So obviously the name BBMA originated from two different functions, two different indicators, which is Bollinger Bands and moving averages. So if you can check on your indicators list, Bollinger Band and moving averages are within the trend category. Okay, so keep this in mind because later on I will touch that again. Okay, so basically moving averages and Bollinger Bands tells you the trends. So obviously it will be an indicator for you to tell you where the market is heading. Okay, so let's add on the first indicator, which is the Bollinger Band. So excuse me. So Bollinger Band, the main function of the Bollinger Band is to contain all prices and all the moving averages within the Bollinger Band. Okay, that's how I interpret the main function of the Bollinger Band. Every time the candle or a moving averages, it's outside the Bollinger Band, it is an anomaly. Okay, it's not normal. So it tells you a different story. Okay, so I really need you guys to understand this function, that the Bollinger Band, its main function is to contain all the prices, all the candles within the Bollinger Band and also the moving averages. However, you have to understand that the Bollinger Band can control the movement of um, of the candles and also the moving averages by telling it where to go. Okay, just in case later on I will explain how this function works. Okay, so the Bollinger Band has 5 lines. Basically, from the BBMA notes that you have, obviously there's only 3, but I'm using the old BBMA method, which utilizes the deviation 1. Okay, so for those who doesn't know about division 1, so Bollinger Bands exactly the same, period 20, division 2, apply to close, whatever color you want, and you just add levels 0.5 by clicking to this tab and minus 0.5. So I just use the dash so that it makes more visual to me. So what division 1 is obviously a Bollinger Band division 1. Let's say for example I wanted to add a Bollinger Band, and let me just delete this. Okay, and let's just put division 1 over there. It will fit exactly where the division 1 line was earlier on. Okay, so it's exactly as the Bollinger Band division 1. Okay, so this is top BB. So just to make it quicker, just call it BB. Top BB division 1, middle BB division 1, and lower BB. From top BB to mid BB is buy zone, and from mid BB to low BB is the sell zone. The Bollinger Band has 2 different types, which is very obvious here. This is a momentum Bollinger Band, okay, and this is a sideways Bollinger Band. Although I say that it is sideways, but it is still moving up. I will explain later on how this works. Okay, so momentum Bollinger Band is very obvious. It's very erratic. Top and low BB is wide open, is pointing top and pointing the low. Then obviously what you have here is momentum. Hang on, let me just, okay. This is what we call a momentum. the main reason why I started the webinar with candlestick formations, break and rejects is very important because we need to understand what candle it is and where it opens and where it closes. For example, this is a sell candle that opens at the top and closes at the bottom. So obviously this candle over here is a momentum, because a momentum is defined as a candlestick that closes outside the Bollinger Band, and obviously it's outside the Bollinger Band, so this is a momentum Bollinger Band. This is also a momentum Bollinger Band because its open and close is outside the Bollinger Band, same as this one. However, this one is not a momentum Bollinger Band because its close is inside the Bollinger Band. Opens at the bottom, a buy candle opens at the bottom and closes at the top. Okay, so you have to understand this. And here you can already see the main function of the Bollinger Band is to contain all the prices within the Bollinger Band. So this candle over here is way far out from the Bollinger Band. Now the Bollinger Band will tell these candles to move sideways so that the candles are back inside the Bollinger Band. So this is the main function of the Bollinger Band. Okay, so momentum Bollinger Band is quite straightforward. However, let's talk about the sideways Bollinger Band. Okay, let me just find a good example over here. Okay, let's take this bit over here. Okay, so this is what we call a sideways Bollinger Band. Although it's moving downwards here and going upwards, it's still considered as a sideways Bollinger Band. So during the sideways Bollinger Band, you have to understand that every time the candle break or reject top BB or low BB, it will return back to the middle BB. This is what we call extreme B. Okay, so extreme B happens when the price rejects or breaks the Bollinger Band when the Bollinger Band is sideways Bollinger Band. Okay, so as you can see here, the candle rejects and goes towards mid BB. Candle breaks and goes towards mid BB. Candle break goes towards mid BB. Okay, so why is it that I say that extreme B, it tells you that if the candle breaks or reject the top or low BB, it goes to mid BB. But how come sometimes it doesn't go straight to mid BB directly? Okay, so this is what we need to understand. Okay, when the Bollinger Band is sideways, the division 1 is active. So when it's active, it acts like a dynamic support and resistance. So is one of those lines that the candle must break or reject. Let's say, for example, on this particular area here, the candle has broke through sideways Bollinger Band, and its main target is to go to mid BB. However, it did not achieve going to mid BB and goes back up. So what's the explanation over here? So obviously, when the candle breaks top BB, the candle will try to go up. Obviously, it couldn't go up because it is a sideways Bollinger Band. It has to go back inside. That's the main function of the Bollinger Band over there, telling you that the price has to go sideways and downwards back inside the Bollinger Band. Okay, however, this candle over here rejected division 1 and has to go back up, and a new candle opens, tries to go up, it couldn't manage. It tries to go down, it couldn't manage to break through division 1 and goes back up again. On the third candle here, it managed to break through division 1 but couldn't manage to break mid BB, so it has to go back up, and a new candle opens here, tries to break division 1, couldn't manage, and it closes over here, and a new candle again opened here. It tries to go to mid BB, it couldn't manage to do that. It broke through division 1 and closes on the top. So its next target is obviously the top BB. However, the next candle couldn't manage to do that, and also the second candle doesn't manage to do that. So this candle here broke through division 1 and mid BB. So that finishes the cycle of extreme B. Okay, so that's how extreme B works. So even over here, these few candles here, this is what you call extreme division 1. Basically, the candles couldn't break through. The candles reject division 1. This is an H1 time frame, so for about 5 hours, the candle couldn't break through division 1. Okay, so that's another example of extreme over there. Extreme B is when the candle break or when the candle reject or break top or low BB of a sideways bullinger band, and obviously here is a good example of extreme division 1. So so far it's very just to make it easier for you to understand that if the candle starts over here, it will try to break division 1. If it couldn't manage to do that, okay, couldn't manage to do that, then obviously it has to go back up. Then when it goes back up, then it's extreme B again. So when it managed to break through division 1, it couldn't manage to do that, then it has to go back up again. And if it doesn't break through division 1, then the next candle will try to break through mid BB. So that's how the division 1 works, and that's how the sideways bullinger band works. So far with the the function of the bullinger band, sideways and momentum bullinger band is. Does anybody have any questions on that? Okay. This is not within your notes, but I'm just gonna share my own opinion on sideways bullinger band and also momentum bullinger band. What I noticed with momentum bullinger band and also sideways bullinger band, that during sideways bullinger band there is a component of momentum, and during momentum bullinger band there's also a component of sideways bullinger band. Okay, what do I mean by this? You have to understand that the market doesn't move on a straight line like this. Okay, the market travels up and then it creates a sideways before it continues to go up again, and then obviously when it's up it's gonna make another sideways, and then when you go down, then you're gonna have another sideways again. So this is how the market move. However, what you need to understand is when there's a momentum like this, as soon as you see the price is going sideways, then obviously you know here that the price is going to go sideways because this is an extreme, because the candle closes too far away from the bullinger band. So when you have this, then obviously the sideways bullinger band has already started over here. Okay, so what do I mean by this? Okay, although this one is a momentum bullinger band, there's also a component of sideways bullinger band within the momentum bullinger band. Okay, if you look into M15, you will see that the bullinger band is already sideways. Okay, so that's a component of sideways within the momentum bullinger band. Excuse me, still not well. Okay, so here this is sideways bullinger band, as I mentioned earlier. This is already a sideways bullinger band. Every time the bullinger band touches the top and low BB, it already is gonna be an extreme B. Okay, so this is a sideways bullinger band. Okay. Okay, let me just fix this for you. Okay, so even though the price is moving upwards and downwards, this is still considered as a sideways Bollinger Band, and this here is a momentum Bollinger Band. So during sideways, there's also component of a momentum Bollinger Band. Still component of momentum. For example, this here, there's the top and low BB is open, so this is a little bit of component of a momentum. However, this is a sideways Bollinger Band, that's why the price has to go back to middle BB over here. How come it took so long for the price to go to middle BB? Because of division 1. As you can see, there hasn't been any candle that managed to break through division 1 until this candle over here. So if you guys can see that, then you'll understand how the Bollinger Band works. So sometimes it's quite useful to take away all the moving averages just to understand what's happening within the candles. Okay, so even over here, every time the price touches the low BB, it has to go back to middle BB. See, it's tried to go back to middle BB, but it was rejected by division 1 until this point over here. Okay, so until this point is back to middle BB, then it can continue its course again. Okay, so we have to understand those two bits over there. Okay, so this one over here is a sideways. However, this part here is a momentum Bollinger Band because both top and bottom are wide open. Okay, so I think that's the Bollinger Band part. So let's talk about moving averages. So before I move to moving averages, is there any questions? Okay, since everyone's clear with that, let's move on to moving average high. MA5 high. As a BBMA trader, I always tell my friends that we really need to understand and we really need to remember all of these functions, especially Bollinger Band. What is its main function? How many types are there? And what happens during sideways? What happens during momentum? And now we add in on MA5 high. MA5 high in your notes has two functions, and you really have to understand and remember all of this. First functions is to detect extreme A sell. Okay, because this is a sell indicator, then obviously when MA5 high is outside the Bollinger Band, then it detects extreme sell. Okay, and the second function is a point of entry sell. Okay, as you can see here, as I explained earlier on, during candle break and reject, every time the price reject an indicator, obviously this is sell indicator, then obviously it's a entry sell. It's a sell entry. Okay. Excuse me. So every time the price rejects the sell indicator, especially not especially, focus on MA5 high, MA5 high, and MA5 low. Okay, the price has to reject or break these two first before MA10. Okay, so the first two functions is the two functions as per your notes is it detects extreme A sell and also a point of entry sell. As you can see here, there's a few points here that tells you that this is a point of entry for sell. Okay. Under my notes I have 3 because every time the price rejects or does not travel within the candle body, then the price will keep on moving downwards. So I use it as a candlestick direction. Okay, if it's not within the candle body, it doesn't break, or if it rejects, then obviously the price is going to go down until it breaks over here, then the price goes up, rejects again, the price go down, It breaks again, it goes up again, and breaks, goes up, reject, goes down, breaks, goes up. So this is a candlestick direction. It tells you where the market is moving. So that's the third function of the MA5 high. Okay. I'll add in MA5, MA10 high. Okay, just bear with me on this. Okay. So MA10 high on your notes. There's only one function, is to um, give a much more stronger reentry, a more valid reentry, such as this. Both MA5 and MA10 high are rejected by the price, as you can see here. So these are much more stronger reentries. Okay, and the other function that I always use for this one is obviously the MA crossovers. So as you can see here, there's a MA5 high and 10 crossover. Whenever MA5 high, Mahi 5 is below Mahi 10, this is a sell mode. Okay, so it's going to continue, the price is going to continue going downwards. As soon as you can see here, this is a sell mode. As soon as there's another crossover, Mahi 5 is above Mahi 10, then this is a buy crossover. So this is a buy mode. Okay, and then you can see here again, there's another confirmation that the price is going down. So we really need to train our eyes to see all of these small details, so that we will have a much more better decision making, and our analysis is much more better. Okay, so apart from giving a much more better reentry, it also gives us another point, which is the MA crossovers. Okay, so let's talk about Malo 5. Malo 5 is exactly the same as Mahi 5. It's obviously early detection for extreme A buy, okay, and also a point of entry for buy. Every time the candle rejects the MA5 low, Malo 5, then it is a point of entry buy, okay. And exactly like Mahi 5, every time the candle breaks Mahi 5, the price is going to go down, okay. It breaks until it rejects or does not travel within the body, then obviously the price will go up. Until it breaks again, it goes down, rejects, goes up, breaks again, goes down. So it is a candlestick direction. Alright, Malo 10. Sorry about that. Okay. Malo 10 is exactly the same as Mahi 10. There's in your notes, there's only one function, is to give a much more stronger entry, much more valid entry, which is when the price rejects both Malo 5 and Malo 10. It will be much more better if it rejects more moving averages or even mid BP. Okay. All right. Also, in my notes that I also added the crossover. So obviously, when Malo 5 is below Malo 10, then this is sell mode. And if there's a crossover like this, Malo 5 is above Malo 10, then this is a buy mode. So let's see both of them working together. Let me just delete this indicator here. Okay. All right. So let's see over here. Obviously, both indicators telling the same stuff. There's a crossover here telling that this is a sell mode, and this is also a sell mode. Over here, the same crossover. However, buy indicator tells a much more earlier story here. There's a crossover here. However, the sell indicators are a bit late on that. So it is very important to use both indicators for us to derive our assumptions and analysis. Okay. And another add-on to the crossovers is what I always use. Every time the moving averages, opposite moving averages is closing in to an opposite indicator, that the price will go sideways to create a re-entry. Okay, what do I mean by this? Okay, for example, on this one here, MA5 low is going away from Mahi 5 is going away from Mahi 10 and is closing into Malo 10 here. When you see this happening, then there is the possibility of the price moving sideways to create re-entry on this time frame or lower. Okay, what do I mean by this? So if there's a moving averages that closing in towards an opposite moving averages, then it is creating a re-entry on this time frame or lower. Okay. Another point here, let me get another example. So for example, over here, Malo 5 is exactly over at Mahi 10. The price goes sideways and creates a re-entry on this time frame or lower. Okay, it happens again here, the price goes sideways again to create a re-entry. So that's how you work with the moving averages. So now let's move on to the most awesome moving averages of all, the MA50. If you understand how the MA50 works, then obviously it will be much more better for you to understand or analyze where the market is heading to. Okay, so for example, over here, in your notes, it only tells you that the MA50 is it tells you the trend. If it's if it's below mid BB, then it's an uptrend. If it's above mid BB, then it's a downtrend. Okay, what you need to understand is every time there's a crossover like this, then the sell market has just opened, and the crossover like this, then the buy market has just opened. Okay. Okay, but what we need to understand is when the MA50 is outside the Bollinger Band, then it tells you that the price is going sideways to create a re-entry on a much higher time frame. Okay, so for example, over this part over here, let me add on other stuff. So on this time frame here, the Bollinger Band goes outside, the MA50 goes outside the Bollinger Band, and the price goes sideways and upwards. When this happens, then obviously it creates a re-entry on a higher time frame. So, okay, so you can see in this time frame you have a re-entry sell on H4 time frame. Okay, let's go to H4. So as you can see here, this is an uptrend. This is what we call a zero loss buy. Every time the price goes away from MA50, at some point it has to go back and meet up again with MA50. And the point of where it meets up, if there's a rejection or there's an extreme at that point, that is a re-entry on a higher time frame. So what do I mean by this? Okay, so for example here, the MA50 is outside the Bollinger Band, and there's extreme here. So this is an extreme B because the Bollinger Band sideways on this part. Okay, there's another one here, extreme division 1. Okay, this one's extreme division 1 again. Sorry, this one is extreme division, extreme C B. Okay, I'll explain that later on. And the MA50 is outside Bollinger Band again. So there's the re-entry again here, which is extreme B. And here, there's another one here, which is extreme B again. So as you can see, there's 1, 2, 3, 4, 5 re-entries that I can see on daily re-entry buys. Because this is an uptrend, and obviously it's a re-entry buy on a daily level. Okay, So let's find those stuff. Okay. Okay. Oh, there you go. So there's one reentry, 2, 3, 4, and 5. So even by looking at on a H4 level, you will be able to see the reentry on a higher time frame. So if you understand how the MA50 works, then you'll have a much more better grip on the multi-time frame. For example, this is a downtrend, and there's an extreme at MA50 here. So this tells me that there's a re-entry cell on D1. Okay, let me find that box over here. Okay, so even though this part here doesn't tell any story, because here it tells me that it breaks Mahi 5 and 10, so it tells me that this is a candlestick direction for buy. However, H4 tells me that there's another story on H4, that it tells me that this is a re-entry sell on D1. So even though D1 doesn't tell you the story, but this is a hidden re-entry as what I categorize it. So if you understand how MA50 works, you will be able to see this hidden re-entries. Okay, so that's all the moving averages on the basic BBMA. Um, Now we'll have a quick 5-minute break, and then we'll move on to signals and setups. Okay? Okay, let's start again. Let's move on to signal and setup. So obviously, in BBMA, there are four signals. The first one is candlestick momentum, which is obviously I already highlighted earlier on. Whenever you have a momentum blinker band, then you have a candle that closes outside blinker band, then this is candlestick momentum. Okay, so what you need to understand with candlestick momentum is that e- every first candlestick momentum will give you one re-entry. Okay, so the first candlestick momentum will allow you to have one re-entry. Okay, and the second one is candlestick arah awal, which is the early direction. Okay, so as you can see, let me just show it here. So you have extreme A, you have re-entry buy, and you have a candle that break Malo 5 and Malo 10. So this is candlestick early direction. And then you have CS Arakuko, which is the candlestick direction. So over here, the candlestick that breaks through Malo 5 and Malo 10 and also mid BB. Okay, so for candlestick direction, how you identify this as a valid candlestick direction is you have to check lower time frame for momentum. Okay, so here you have a momentum and also at M15. So two time frames has to have momentum. So as you can see, so that's a valid candlestick direction. And over here, I also sorry, give me back here. I also prepare the different types of extreme. So here, the first one is extreme A, which is MA outside the blinker band. And then let's move on to extreme B, when the blinker band is sideways. Whenever the candle break or reject, this is extreme B. And here's a good example of extreme CB, whereby the candle rejects MO50 at within the area of mid BB. Okay, that's extreme CB. Extreme B is obviously if a candle does not manage to break top or low BB without even the MA going outside. So this is what you call extreme D. So the candle couldn't break through blinker bands. Extreme CA is obviously when the MO50, sorry, when the candle rejects MO50 at top or low BB. There's another example over here, extreme CA. So the candle rejects MO50 at top or low BB. And obviously the last one is extreme deviation 1. Extreme division 1 works whenever the the blinker band is sideways. So when the candle rejects division 1, then that's an extreme division 1. Okay, so we really need to understand all of these 6 different extremes, because in order for us to solidify our analysis based on the BBMA code. So the BBMA code is re-entry, extremes, and MHB. Those three things are very important for us to analyze the market. So, for example, if you have re-entry on a higher time frame, say for example, let's say D1. So over here, let me just delete all of this stuff. So over here, this EU on a daily, you have the candle rejects Mahi 5, which is a re-entry sell. Okay, and H4, you have an extreme B, and the MA50 is outside the blinker band, which tells us that there is a re-entry on a higher time frame. And H1 tells us that it's an MHB. How do I know that this is an MHB? You have extreme A, okay, you have TP wajib, and you have a candle that does not break top BB, and you have a reverse candle. Now you're just waiting for the retest of MHB, then it's complete MHB. So you wait until there's a retest, then that's your MHB over there. Okay, So basically for BBMA code, this is a REM, REM. However, what we need to understand here is this is on a daily time frame. This is an uptrend setup. Okay, so as I said earlier, every time there is an extreme or rejection at M of 50, then this tells us that there is a re-entry on a higher time frame. So if we go to weekly, then if you can see that this might be a re-entry on a weekly level. However, here is the here is the first CSM candlestick momentum, and this is the re-entry. And after that, there's an extreme D. There wasn't any more momentum over here. So a re-entry on this level might be kind of like a different story-wise. Okay, so we need to understand. We need to make sure that this lower time frame tells us where the market is going first. So if it was me, I would wait for the MHB to be fully MHB when the Bollinger Band already arched downwards and we know what's happening on the lower time frame. So here we already have nearly a full setup of sell over here, because you have extreme TP wajib, MHB, you have a higher MHB, and you have another high MHB, and you have a candlestick direction. So if you can see here, this is obviously an example of head and shoulders. Okay, then obviously this head can be utilized for another shoulder again over here. Okay, so that's how head and shoulder works. So this tells me that M15 is already going downwards. Okay, so that's how we interpret how the market works. That's touching much more now on the multi-time frame analysis. Okay, so I already touched on the signals. Now let's move on to the setup. In BBMA, there's only two setups, which is re-entry and also MHB. So how does MHB works? So here is a good example of MHB. You have extreme A, TP wajib, the price goes up, couldn't manage to break top BB, and there's a reverse candle. Okay, so whenever you have this, then you have to mark the body of the two. So obviously if you want to narrow it down to much more better entry is the top of the previous candle. So obviously whatever candle that goes inside to this highest marking body will be a MHB retest. So obviously this one is the MHB retest, and this is a point of entry sell. Okay, so when you entry sell on MHB, you have to understand that if there is a momentum, a buy momentum here, then that is your cut loss point. If the price reject mid BB, then that's your TP point, TP1. If the price reject division 1, you have to TP because the price gonna go back up again. So if you can check on the channel, I already made an SOP based on the candlestick direction, which is this one here, and also an SOP on MHB, how you entry, where you TP, and how you hold the positions for an MHB entry, and also what happens next after the candlestick direction. Because I'm a scalper, so that SOP is basically on a scalper mode, because as soon as I see extreme division ones, rejection of low BB, then I already TP my entries and wait for another re-entry after that. But if you're an intraday trader, or you're swinger, or you're holding positions, then obviously it's totally up to you where you set your TP point. Okay, so that's how you entry MHB. And obviously for me, my best advice to everyone is to entry at the most safest entry, which is well, minimal risk entry, which is the re-entry after a candlestick momentum. Why do I say that this is a minimal risk? Okay, so as I already told you all earlier on, that the Bollinger Band and moving averages are under the category of trends. So when you say it trends, I mean it's the flow of the market, where the market is going. Over here, after a CSM, if you notice, all the sell indicators and the buy indicators are all within the sell zone. Okay, mid BB to low BB is the sell zone, and all the moving averages are within the sell zone. Okay, and obviously, if you haven't noticed by now, all the candles are confined within these two pairs of moving averages. Okay, if you can see, let me just put a line over here. These candles are confined within the moving averages. So obviously, if all these moving averages are within the sell zone, then you know it's a much more safer entry for you. And my biggest advice is you find a CSM, you find a re-entry after the first CSM. So this is a good example of that over here, because you have all the moving averages at the particular zone. So that's MHB and re-entry. Those are the signals and setups of BBMA. So, well, during the explanation of the signals and setups, I already explained much about multi-time frame analysis. Okay, so I think it's much more better to pick another pair for the multi-time frame analysis. Okay, so is there any suggestions? Me some picked UJ. Okay, so let me just let me just hang on. Let me just open something here. Just give me a few seconds. Yeah. Okay. So as you can see, multi-time frame analysis. This is my SOP. You don't have to follow it 100%. Basically, at some point you'll be able to make your own SOPs. What I do with my analysis is I start with D1 first, because I usually trade H4 and below. So I just would like to know what's happening on a daily basis. Okay. So even though I start with daily, however, all of these SOPs need to be carried out accordingly in sequence. Okay, so that you'll be you'll have much more defined or much more systematic way of doing your multi-time frame analysis. Okay, so the first one is you check the MA50 position, whether it's below or above BBB, because this will dictate if it's downtrend or uptrend. And then the next thing you need to check is whether the price is at or away MA50, because if it's at MA50, then obviously this is a re-entry on a higher time frame. But if it's at away from MA50, then maybe there's a setup on a lower time frame. So instead of going all over the place, you'll be able to narrow down which time frame to look at next. Okay, so then you need to check whether if MA50 is outside BB. So basically, it's a detection of possible reentry on a higher time frame. Okay. Once you've done that, then you define what type of blinker band it is. If it's sideways or momentum, you check for signals in setup, and then obviously the MA configuration, the crossover modes that I've been talking about, the indicator attractions, whereby if cell indicator attracts to a buy indicator, which tells you the price going to go sideways to allow a reentry on that time frame or lower. And obviously, if you have learned some other techniques, then you can use those techniques to solidify your analysis. Okay, so let's go to Jay. Okay, not the simulator one. Okay, so as I said, we go to daily. So basically, the daily tells me that MA50 is just about to cross the mid BB. So which tells me that the market for buy is just about to open. Okay, and we have a CSM over here and a re-entry. However, over here we have extreme deviation 1, and right now the price is away from MA50. So when the price is away from MA50, there's a higher chance that the price is going to go back down to MA50 or closer to it. Okay, and here is there's not much of stories over here apart from this one. This is extreme D. Okay, so this is the first indication that the price might go down on a lower time frame. Okay, so I know for a fact that I have to look lower because there's no setup for a higher time frame because the price is away from MA50. Now I go to H4. Okay, H4, MA50 first. So basically MA50 at below mid BB, so you know is an uptrend market, same as D1. And however, you have a sell setup on H4 because you have extreme A, you have candlestick direction, and then you have another extreme A here, candlestick early direction, and then you have CS Arakuku over here, and you have a possible re-entry at this point. So there's a possibility that this is a re-entry sell. Okay, so this tells me the price might go down, and the blinker band is still sideways. It's not really it's a sideways over here. Then we move on to H1. Then H1, there's a consolidation happening over here. You know that whenever time frame is going sideways, and obviously you know that it is creating a re-entry on a much higher time frame. Okay, and as you can see, the sell indicators are on the buy zone, the buy indicators are on the sell zone. So obviously there's a battle between sell and buy at this point. And you can see MA50 is at the middle of the park. So it's the middle BB. Okay. So over here, the price, if you have noticed that this is sideways Bollinger Band, and the price could barely manage to break through division 1. So there's a higher possibility that price is going to go down. And this here is a rejection of MA50 at MIBB. So this is extreme CB. Okay, so you have re-entry at H4 and you have extreme CB at H1. So the final confirmation will be at M15. Okay, so let's look at M15. M15 is also a sell setup. However, you have extreme sell here, extreme buy here, and you have a rejection of top BB over here, but no extreme A sell. This is extreme B because the sideways blinker band, and you have lost momentum over here, extreme division 1, and the price is still going sideways. So obviously, there's no the direction of the market is not defined yet, because H1 is going sideways. Whenever H1 is going sideways, then obviously it will be creating a re-entry on a much higher time frame than H4. So obviously H4 is still going sideways as well, and D1, there's a possibility that this might be a re-entry on D1. So the price going down is a possibility that it might create a re-entry on D1. Okay, so I would look for a re-entry on this zone part at EMA 50. As you can see here, let me so we can do some back tests over here. So you have an extreme at EMA 50 on an uptrend. At H4 you have rejection, and okay, those are the two. And you also have EMA 50 outside, and there's a re-entry over there. Okay, so there's a three possibility of re-entries on a daily basis. So the first one here and second one. Okay, the first one was actually for H4. Sorry, the second one was actually for H4. So if you can see, there's a possibility that the price might be going towards Malo 5 and 10 of daily. So this sell setup on lower time frames might be um, going for that particular target. So if you know those targets, then now we already have made a rough analysis on where the market is heading for UJ. So what we need to do is how do we solidify this information? What other means can we use? So obviously, if you have learned about FMCBR, if you can pull Fibonacci retracement and stuff like that, so obviously you can use all of those things um, to support your analysis. Okay. So let's say, for example, on this one, maybe you can pull your sell Fibo on H1 to see where it's going. Okay. So obviously it's at the pull by area. So let's see where TP1 lands. So if you can see here, TP1 lands exactly at daily reentry. So you can use all of this stuff to solidify your analysis. And then obviously H4, let me just check here. At H4, it tells me that there's a reversal diversion over here. So basically, it tells me that the awesome oscillator tells me that the price is going to go down. However, this one tells me a different story. So I usually follow this. So there's a guide on awesome oscillator, the channel. So look for that as well. So you can use all of those other stuff to solidify your analysis. So I can see here that obviously this is a sell market. So I would aim for a sell on next week, something like that. Okay, and then if you're not satisfied with that, then obviously this is a USD JPY. So I would look for another JPY market to see whether it's roughly going towards the same as my analysis. So here, for example, there's EJ here open. So if EJ tells me roughly exactly where it's going, then obviously it's probably the same. So D1 is, I already can see that it's a sell setup. You have extreme A, you have CS direction early, and you have a re-entry. So that's a setup over there. H4 tells me that there's extreme A, also BB sideways. And H1 tells me an MHB happening over here. So that's already REM. So it tells me that the price is going to go down. So that's EJ. Let's find another J market. And let's go for AJ. Okay, let's go for D1. D1 exactly the same, much more farther away. So you have extreme A, you have candlestick direction. H4 tells me that is already going down. MO50 over here, extreme CB, and you have the market going down already. So it's much more faster. Sorry, EJ is just about to start, and UJ is at the very beginning. So I would like to see what happens with UJ on next week. So that's how you you do your analysis. Um, I already provided the the SOPs for that in the channel. So do look it up, and maybe you can you can use this as a template and make your own SOP. So it helps you, it guides you what to look at during your multi-time frame analysis, because each and every one of these indicators will tell you the story of where the market is going, especially the Bollinger Band and also the moving averages. Please do some backtests on MA50 as well. So I think we're pretty much done for today, and I hope that the what do you call this? The webinar is quite useful to all of you. So before I end the session, if there's anyone who wants to ask some question, please do so. Okay, so Misham asked me if this applies to all currency, even gold. So to be honest with you, it applies to all currencies. If you're using BBMA, then this is, I mean, I've been using this SOP. It applies to whatever currencies that you're trading with. As long as you understand BBMA, you understand the functions of all the moving averages and the Bollinger Band, you understand and you memorize what are the characteristics of MHB, what are the characteristics of re-entry, how do you validate candlestick direction. All of this simple stuff, if you combine it all together, then you will have a much more bigger picture of what's happening, and you'll have much more confidence on your analysis. Okay. Awang Kabus was asking about extreme D. He wants me to give another example. Okay. So okay, let me just go find a good example. Extreme D. All right. So here, so you can see the market is moving upwards, but the candle rejects stop BB, or it can be on low BB, but this one is an upward, is much more like a momentum linear band. So this is an extreme D. Okay, so you use extreme D during a momentum linear band when the candle rejects stop BB or low BB. Okay, this is extreme D. Okay, any other questions? Okay, if there's no more questions, then I think I'll end the webinar for now, and I think I'll make one webinar next week on Malay version, hopefully. So I think that's it. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.